What's up, everybody? Jonathan Rose, owner, Masters in Trading. Before I get going, this Friday I'm going to hold a free masterclass on how to trade in a zero interest rate environment. Now that the Fed has said they're going to peg interest rates pretty darn close to zero for the next couple of years, let's talk about how to trade in this environment. Come to class this Friday. In the video description, I'll leave a link. Let's get into the video. So in front of you guys, I have three lines. I've got the green line, the blue, and the white. When we look at trading futures, specifically talking about interest rate futures right now, instead of just speculating on whether bonds are going to go higher or whether they're going to go lower, we want to look at the difference between different interest rates that trade on the yield curve. So watch, if this is the yield curve and it goes out from 2-year to 5-year to 7-year, 18, 30, all the way up. Right now, rates are pretty much at zero across the board, 2s all the way to 30s. But what we want to do when we're trading is instead of just looking at individual bonds or individual notes, instead, we want to look at the difference between these different instruments. So if we look at ZN, ZB, and UB, this is the 10-year future contract, the 30-year, and the Ultra, 30-year plus. What these really are, though, it's closer to a 7-year, this is closer to an 18-year, and this is a 30-year. So when we're trading these, rather than just cross your fingers and bet on whether a future contract is going to go higher, whether a future contract is going to go lower, instead, we want to look at the relationship, guys. We want to look at the relative value between those two instruments. And so ZB-UB, which is going to be here to here, is represented by the green line on the chart. So the difference between ZB and UB is actually selling off. But the relationship between ZN and UB, which is going to be the 7-year and the 30-year, the white line is actually trading much higher today. If we look at the blue line, that's going to be the difference between the 7-year and the 18-year. That too is really strong. So let me clean this up. I'll use a different color. I'll use red. So if we're just talking about the ZN, the ZB, and the UB, right? And we have this as, earlier we said 7-year, 18-year, 30-year. Well, the blue line is just showing us the relationship between these two. The green line is the relationship between these two. And now the white line is the relationship between ZN all the way out to UB. So the white line has 23 days, or years, excuse me, of duration. 30 to 7. So 23 years of duration is really freaking strong today. What isn't strong is the green portion. Just this portion is really weak. The blue portion is really strong. So now I ask you, if the blue portion is strong and the white portion is strong, what in the heckles is going on with the 18 to 30? Why is that so weak? Perhaps that's just supply and demand. Perhaps it's wrong. I personally think that green line is long. I think traders can benefit by buying 2 ZB and selling 1 UB. So the trade, if you want to get long that green line, to buy 2 ZB and sell 1 UB. What this is a proprietary tool that we use. See, it's down negative 1,218. If that green line rallies to the 0 line, you would make $1,218. If it rallies all the way up to here, the 1,000 line, you would make $2,218. That's what we're going to be talking about this Friday, guys. Come, you'll see a lot more lessons just like this one. This is a phenomenal trade. It's a trade that I've personally been doing since 2003. Come, check it out. My name is Jonathan Rose. I'm the owner of Masters in Trading.